Hello again, everyone. In this technical analysis of the stock market video, I call it once in a century because it was reminded me of what Bill Gates called once in a century pandemic. And he wrote about that back on February 28th in the New England Journal of Medicine. Pretty interesting article. If, by the way, if you have not seen his TED Talk, it is worth checking out. This is a TED Talk from literally 5 years ago this month, April 2015. Check it out. All right. In this video, we're going to talk about the S&P 500. I'm going to talk about what's going on with it right now, where I think it's at with the Elliott Wave picture. But I'm also going to compare it to 1929 when we had another super cycle peak and we had a crash that kicked off the Great Depression. And, right now there's a whole lot of talk about people talking about possibility of moving into another depression. Who knows for sure? The unemployment, the way the global economy is shutting down right now, it's a pretty scary environment. So let's take a look at that. And then I'm going to check in on oil. So let's start off here with the S&P 500. Here's what it did on Friday. It was down 38.25. You can see this little move in here. Kind of sideways type movement over the last 3 days. Here's an hourly view, my 65-minute chart. We just kind of chopped sideways over the last 3 days. For the week, we are down a little bit more, down 52.82 for the week in here. We did slightly take out the previous week high, but then we just kind of pulled back down. So it's really hard to make anything from that. This was a big bullish engulfing candle, and I really thought if it was going to be strongly bullish, we'd have some kind of continuation. I really don't think we got that this week. All right, let's take a look at the Elliott Wave picture. Okay, let me pull up this scenario here. Okay, here's what I think is going on. I think from the high that occurred on February 19th to the low that occurred here on March 23rd, I think we have 5 minor waves complete, and therefore I'm marking it as intermediate wave 1. So yes, do I think we're in a bear market? I do. I do think we are in a new bear market. So right now, there's a good high probability that intermediate wave 2 was just finished right here at this high. But there's also a very real possibility that what's going on is that we have more of a corrective A, B, C pattern, and that this could be A right here. Okay, so this move right here could also be A, B, C that we're carving out, and that wave 2 may not be complete till all the way up in here. I think we're going to find out over the next 3 weeks, because I think we've got the potential to have a pretty big downdraft in here if this is truly finished, and I'm going to talk about why. We're going to do a little comparison to 1929. So I've done that before with the Dow Industrials looking back. This 23 days is really, really interesting. 23 days from intraday high to intraday low, the S&P dropped 35.4%. That's a huge move, as we all know, and this has been in a pretty dramatic downdraft. Let's take a look at 1929. Okay, so here's 1929. Now, here's 23 days in 1929. This is the first wave down. Here's the second wave back up. Here's the third wave down, and here's the fourth wave, almost like a ball bouncing off the concrete, being thrown down from a couple stories up in the air. You can see big dramatic move to the upside, and then we finish this move to the downside here. It was down, I got my notes somewhere, down 49.4% at the low here in 1929, from high, intraday high to intraday low. So now the real question is, are we, where are we in terms of the S&P and the Dow Industrials type of thing? This whole move right here, are we here with this move, or are we here with this move? Okay, right now I'm leaning towards us being back in here. And actually, do you see how we had this first move down, and then we had 5 waves back up, And then notice how the pattern is that we're coming down, and notice this little pattern right here. Well, that's very similar to what we have going on right in here, but this took 6 days instead of 5 days. 1, 2, 3, 4, 5, 6. And we're coming down, and we've got this same, almost identical little pattern that's showing up in here, like a little 3-day pause that's going on. I just found that really, really interesting. So now, watching to see, so if this is where we're at on the 1929 chart, if we're comparing where we are in the 1929 chart, here's what we could be looking at, and we're talking about 2, 4, 6, 8, 10, 12, 14, 16 days, okay? 16 days, 3 trading weeks in effect, okay? So now you sit back and say, well, Joe, this is a pretty big move. That doesn't really look like, this move right here, does it? Well, okay, here's another view. Let me show you something else. Look at this view right here. Here's that same first wave, but this is all the data you get to see. So this is as if we were sitting right there on that day I just talked about, okay? Here's the first move in 1929, first move down from September 3rd down to this low. Then we got this bounce back in wave 2, and here's what's going on now. And so this point right here, this day right here, is this day right here. It's just that this move doesn't look so dramatic now when you have this kind of move following it. And so what we really don't know is, what kind of move are we going to get following this? Now you sit back and say, well, we already had a pretty big move. The first move down in 1929 was 17%. Okay, this one's 35%. But we're already hearing about how dramatic and how we've gone to 10% down from an all-time high to 20% down from an all-time high, faster, stronger than anything in the history of the stock market. So who's to say that we couldn't have an even more dramatic downdraft here in the third wave? Now, if we're truly starting off on our third wave to the downside, the third waves usually are a stronger, faster type of move than the first or fifth waves in terms of a 5-wave move to the downside. So I think we're going to find out real soon, are we in this third wave? Are we going to continue to come down in here, close this gap, and continue to take out this prior low and sell off? And what kind of move are we getting with that? Or are we going to chop around a little bit and then push higher and complete wave 2 up here, and then start wave 3? Either way, I think we got a pretty dramatic wave 3 coming, and now you have some idea as to how we kind of compare back to 1929 with this. All right, let's take a look at oil. Let's go back to this view. I'm going to come over here to oil, USO. We had a huge snapback in oil this week. It's been all over the news, and everybody's been well aware of what's been going on with it. So right now, I'll make sure I pull up the right scenario in here. Let's look at the weekly view. Here's what I think's happening. This is the bigger picture. I've been looking for major moves to the downside here, trying to flesh out 5 waves for quite a while. And so right now, I think we've had the third intermediate wave, super strong, big gaps to the downside of the third primary wave. Third intermediate wave is complete, and now we're snapping back in the fourth wave. So I think there's a decent chance after we get this little fourth wave move in here. Let's go to the daily view, okay? After we get this little fourth wave move, and I do have much more detail on the wave counts. I'm just not going to go into it right now. We're going to then come back down, complete the third primary wave. Then I think we might get a little bit bigger bounce, etc. And it's also interesting to note that all of a sudden, we were supposed to have this meeting with oil producers, OPEC plus and etc. And now what's hitting the wire today is that there's a glitch between Russia and Saudi Arabia, and now the meeting's being postponed. And so far it's been postponed out to Thursday. We'll see what happens. It's a virtual meeting. It's not a meeting in Vienna or anything like that. So we'll see what happens this coming week. But this is what I'm looking for on oil. Pretty dramatic moves going on right now. All right, that's it for this video. If you felt like the video was helpful, give it a thumbs up. And if you're not a member, let me go over here. Head on over to joehenches.net, right here, joehenches.net. Check out the website and check out the membership, become a member. We talk about this kind of detail on all the markets every day. And so if you'd like to have more of this kind of analysis, more of this detail, more frequently, head on over and become a member. All right, everyone, have a great rest of the weekend, great next week, and be safe. And we'll talk to you on the next video.